Hello traders, Rich here, and here's a quick but detailed update on CADJPY. As usual, if you like video analysis, let me know in the comments or simply leave a like. So let's get started. As we clearly see, CADJPY has been stuck inside the range in the shape of a flat falling channel, and we are currently approaching the upper band, which is also a horizontal resistance. That's why we'll be looking for sell setups on lower time frames, of course, unless we have an aggressive break from daily and weekly above 101. In this case, this resistance will become support, and we'll be looking for buy setups on the retest. For now, let's take it step by step. We're around the resistance zone, so let's zoom into lower time frames and look for sell setups. If we zoom into H1 time frame, we can see that this latest impulse movement is engulfed by this rising channel. So for the bear to take over, obviously we need to see a break below it. And as per my trading style, for those who already know me, I'm waiting for a new swing low to form around the lower trend line. In this case, for when the price breaks below the low, it would also invalidate this bullish movement. And of course, once the setup is activated, it would be this trigger. So I'm waiting for a break below the zone and the low and the trend line, right? The stop loss would be above the previous major swing high. For example, it would be here. We can't really know so far because it's still forming. And we target a 1 to 2 risk to reward ratio to have an edge over the market from a risk management perspective. Of course, meanwhile, until the sell is activated, CADJPY would be around the resistance, can go like this, or we can't really know so far, or even break the resistance upward for it to become a support, as mentioned from daily time frame.
Before we continue, I want to tell you about Tickmill. Tickmill is established in 2014 and is one of the leading Forex and CFD brokers with registered users from more than 200 different countries. Tickmill is a no-dealing desk and ECN broker regulated in many countries like the UK, Cyprus, and recently in South Africa. With Tickmill, you can trade a wide range of instruments, starting from Forex to indices, commodities, and even crypto. Most importantly, with very low spreads and trading fees. If you don't have an account yet, make sure to create one using my referral link in the description below to benefit from 5% discounts on your trading fees. And let's continue.
As we clearly see, NZDCHF has been overall bearish, making low lows and lower highs, trading inside this falling broadening wedge. However, we are currently approaching the lower bound of the wedge, which I consider an oversold zone, intersecting with a horizontal support zone from weekly time frame. That's why we're expecting the boost to kick in from here to start the correction movement, just like previously, which would be a whole trend on a lower time frame. That's why we zoom into lower time frames and look for extra confirmation that the buyers are taking over before we buy. From a medium term perspective, we are also inside this impulse movement, making lower lows and lower highs. So for the bulls to take over medium term, we need to see a break above this high. From a short-term perspective, I'll be also looking for buy setups on lower time frames. If you zoom into H1, we can see that lately we have been trading inside this channel, which is a bullish reversal pattern, of course, when it's activated. As per my trading style, I'll be waiting for a new swing high to form around this upper trend line to consider it my last major swing or swing high, of course, and then this would be our trigger. For those who know me, I always highlight it like this as our trigger. And once the setup is activated, the long position with stop loss will be below the previous swing low, and we target a 1 to 2 risk to reward ratio to have an edge over the market from a risk management perspective, which would be around the upper bound of this falling broadening wedge. Of course, meanwhile, until this happens, until we form a new high and break above it, and the DCHF can still trade lower inside the zone before the bulls take over. In this case, I'll be updating my potential swing high. So, long story short, waiting for this, or meanwhile, we can trade higher and break above this. In this case, we'll be looking for a buy. On the retest, it would be an impulse correction, and we'll be catching the next impulse movement. Best of luck, and I'll see you hopefully on the next one.